Geopolitical tensions are rising across the world, and a lot of people are getting very fearful when it comes to Bitcoin, crypto, and the stock markets, as well as what may happen to the oil prices. In today's show, we'll have a look at all of the above. We'll have a look at what will happen to crypto in the event that there is escalation. We'll also have a look at the most likely outcome for oil in the coming days, as that's one of the main topics to discuss. So smash the like button, hit the bell notification, and subscribe to the channel. Let's get straight into it. So following the news that came out over the course of the weekend, once the stock market was already closed, for those of you that live under a rock and don't know what happened, essentially, the US essentially bombed Iran, at least when it comes to their nuclear facilities. And consequently, now there's this whole debate of whether Iran is going to retaliate and what the retaliation would look like. They're talking about closing certain straits where the oil passes through. We'll look at that as well. But I think the first most important question to discuss is, what is the most likely outcome to the markets, at least the S&P 500, which crypto most closely follows when there is any of these major war scares? And we can actually look at that. I've tabulated that over here. We'll have a look at that in a bit. But just quickly looking at what the market's done in the meantime, since Bitcoin is a 24/7 market and it doesn't need to wait for the market open. Well, you can see over here, the market has all your answers from 𝗙𝗫𝗫𝗫. Over the last 72 hours, US bombed Iranian nuclear sites. Russia said countries are ready to supply Iran with nukes, and Iran's parliament voted to close the Strait of Hormuz. So that is essentially the oil passage that's responsible for some of the world's oil, but not as much as you may think, right? So it says over here, yet the stock market futures are down only a mere 0.5% at the open. Oil prices are up less than 2.5%. You would expect it would be more. And he says over here, this is not a market pricing in long-term conflict. So the market is calling the bluff around this entire situation. That can also be dangerous, right? So you do want to keep tabs on what's going on over here. But he says over here, in fact, if the market was pricing it in, a closure of the Straits of Hormuz, oil prices would be then at $120 plus. We'll look at the oil prices as well. They're not. They're actually coming into major resistance over there. So sometimes the charts can give you an indication as to what may come next. But again, as I said, you need to keep tabs on this the same way that you'll need to keep tabs on the oil price, because as it currently stands, it's at a major inflection point. It has the potential to flip a resistance into support, but right now it is acting as resistance, as I'll show you on the daily candles over there. So a lot of important things. But what has historically happened when you do get these scares? Well, if we look at the last couple of major ones over essentially the call it 50, 60, 70-year period from 1950s, well, what we've seen is very, very minuscule drawdowns. I'm not going to go too much through each individual one. You can literally just scroll with your eyes on the chart over here, -5%, -3%, -15%, -17%. This is off of the initial shock as it was announced, as the conflict took place, -11.6%, -5% with the Iraq war, -19% on the Russia-Ukraine war, and then right now 0.5% as it currently stands. We'll see a little bit more today when the US markets do open properly, if crypto does take a dive, if the stock markets go down any further, right? The recovery period, how long did it take for the markets to get back to where they previously were? And reminder, this is based on the S&P 500, the US stock markets, right? 1 month, 2 weeks, 6 months, 2 months, 2 months, 1 month, 18 months. And right now we're in the middle of this one. So what was the performance 1 year later? Well, 30% up, 30% up, 10% up, 24% up, 21% up, 27% up, 10% up. So generally speaking, the market erases these negative situations very, very, very quickly. And we're still in a bull market. At least the S&P 500 is absolutely in a bull market. And this is what you'd expect. The market shakes off all negative news very, very, very quickly. So a lot of people are probably going to be, on the wrong side of this trade. And therefore, there's still the potential in the stock market specifically for a bit of a short squeeze. Crypto is a little bit of a different picture. We know that altcoins are doing horrifically. We know that Bitcoin has massive bearish divergences, and I believe that it's running out of enormous momentum, but the stock market is a little bit of a different picture. So we'll look a little bit more into the stock market today. There is a lot to look at. Now, essentially here is the Strait of Hormuz, and this is what they're basically suggesting that they may close. I'm here in Dubai, very, very, very close, only about 200 kilometers or so away from this. So definitely I'm going to be keeping tabs over here because I don't want to be in the middle of a war zone. But in the past, historically, every time they've threatened to shut this down, it hasn't really happened. Nothing came from it. and you can actually look in terms of the amount of oil that gets distributed to the United States, which is ultimately who they would be taking revenge on or who they'd be attacking in terms of retaliation. It's a very, very, very small amount. So therefore, you have to ask yourself, what is the probability that they would actually go through with this, right? So if you have a look over here, 21 million barrels of oil per day pass through that strait. 76% of it actually goes to Asia. I don't think that they want to hurt Asia right now. Only 7% of that goes towards the United States and 9% goes to Europe. And if we go a little bit further into detail, here's your oil cheat sheet, which is pretty interesting. Let's just quickly change the view over here for you guys so you can see properly. There we go. Here is your world energy, right? 30% comes from oil. Let's break that oil down, right? Who is it produced by? Well, if you go through all the way down to Iran, Iran is only producing 4%, right? 4% of that oil. So therefore, I don't think it's necessarily going to be an as big deal as many people do believe, but we'll keep tabs on it. If you do want to trade oil, good news, oil is now on Bybit. So for the crypto degens who don't want to, KYC other accounts in the traditional finance markets and provide every single bit of data of where you earn the money, well, you can now trade it on Bybit, which is absolutely amazing. There's a link in the description below for those of you that do want to trade any of the indices, commodities, gold, oil, forex pairs, everything is below. They're currently offering, I think, 50% off on the fees if you want to trade oil over there, and you're getting a massive sign-up bonus. Plus, not only that, they're currently running a $1.5 million prize pool over there for the trading competition, and you can get a Bybit card, which is amazing. So let's continue on over there. Let's just quickly go through that. That is Bybit if you do want to trade that. And here is your oil chart. So this is what you can see currently with the oil chart. It's caught within this parallel channel with lower lows and lower highs, respecting that downward channel. And you have a very, very strong horizontal. I speak about this often. This is going to be a very, very significant area, that $80 mark. Ultimately, you don't want to see oil break and hold above 80 because it would have broken the lower high structure. It would be reclaiming a very significant horizontal level, and therefore it could actually start to mark up a lot higher. And if, of course, there was more oil that was passing through the strait, well, ultimately, then maybe you would have oil at about 120, but that's not the case right now. It's respecting that downtrend. So a lot of players will be initiating short trades over there. You can wait for this to start to roll over, right, before you actually start to enter into a proper short. This is why I say we need to keep tabs, because, of course, if this escalates, then, of course, it could at least create a bit more of a drawdown, and you'd start to create a bull flag with oil holding sideways, breaking that downsloping trend line, and then you may actually start to break out over there. So we'll keep an eye on that, right? Stock futures, again, just a bit lower. Crude oil, a bit higher. Gold, a little bit lower off of the news. And the dollar is just a little bit higher. Bitcoin just a little bit lower. So basically, it's as if nothing has really happened, right? Pretty calm reaction, as they say over here in financial markets, and not really any panic moves. All right, so stock market, let's get into some of the other stock things. I think that's the war news out of the way. Obviously, never a good thing, but it's relevant, right? It does affect the market. So S&P 500 still consolidating over here. And I think what's important to note is you have to consider as well what happened on the, it was Friday the 13th. Let's quickly go to Friday the 13th. Here's something significant, right? Friday the 13th was this candle. We'll quickly mark out the low of that candle. If the escalation that's taken place off of the Friday the 13th, which was the initial reaction to the war news between Israel and Iran, if you don't take out that low, when there has theoretically been an escalation because the US has now joined the party, then that's an indication as to the directional bias for where the market wants to go, where it's still maintaining those high lows. And the longer that you can consolidate between these two levels over here and form a trading range, the higher the possibility is that maybe later on this year, you start to break out to put in new all-time highs. And that's the most likely resolution, right, for the stock market. So I'm not talking in the immediate term. In the immediate term, there will be, of course, a whipsaw effect, some sort of increase in volatility, especially this week. We have actually, I think, another Fed meeting that's going to be taking place. We'll look at the economic calendar later on, but that's going to be something to keep an eye on. So expect that there will be interim volatility, but the most likely resolution for the stock market is still going to be breaking out to new all-time highs for the S&P 500. Then you have to ask, will crypto follow, right? Because crypto is showing weaning momentum, and I'll cover that in a moment when we get to the weekly charts. At least your best case bullish scenario for Bitcoin is that it follows the stock market because they trade so similarly. And that's why we look at the stock market. Also, with that being said, we have some, robo-taxi news. Tesla, obviously, creating the robo-taxi ride, which is now officially launched in the US. This is just a quick hype on ordering it. Very, very similar to an Uber, right? They just order it. There she gets in the car. I'm running this on 2x speed. Gets in, plays around with the apps. Off it goes, drives her to a destination. So this has taken effect. What does this mean for the Tesla price? We'll have a look at that. Sometimes when these news events do hit, it does become a sell the news event. Tesla right now is simply just consolidating. So we will cover that as well in a moment. And if you look at this is essentially their plans from Mario Nofel posted about Tesla and what they're looking to do in the future. He says over here, your Tesla will be earning money. We'll have a model that is some combination of both Uber and Airbnb, which means if you actually own a Tesla, you'll be able to add or subtract your car from the fleet. And then you can lend it out or rent it out, right? Just like Airbnb, you can rent out your spare bedroom, or you can rent out your house when you're not using it. If you don't feel like using your Tesla, maybe you've gone away for a holiday for 2 weeks, simply just add your Tesla to the fleet. It automatically connects to the app. And if somebody orders it, it'll just drive your Tesla from your house to the nearby surrounding area, if it makes sense, destination-wise, and off it goes, right? No driver. How insane is that? Absolutely amazing. Really, really, really crazy. But what does it mean for the actual Tesla price? Well, we can have a look at Tesla over here. Now, Tesla is still consolidating. It's still putting in those major low highs, but it's putting in high lows. So it's approaching the apex of a symmetrical triangle. Given this news, I don't expect any sort of fireworks out of this. In fact, I would say that the most likely outcome is that it probably does just continue to consolidate. Oftentimes, this does mark local tops when these major news events come out for to buy the rumor, sell the news is out. Does it just slowly bleed down towards the mid-range? If it does, I think this provides a very, very good risk to reward opportunity with, a major SR flip coming into the mid-range level over here. So if you do see Tesla coming back down and it is a sell the news event and it slowly sells off down towards that 258 region, any low, high low that forms over here as you approach the apex and you can hold the mid-range, I think is a pretty good opportunity over there. Okay. Someone says Tesla bears eat soy, the soy boys. Yeah, possibly. Although what I would say is that often the vegans and soy boys are also at least the carbon haters, right? Have you ever seen those Lamborghinis with Greta Thunberg wallpaper on the back with as she's shouting and there's like flames coming out the back? But look, I'm a massive Tesla fan as well, but realistically with this chart over here, it's just consolidating. I think a good zone is 260. If you don't have any Tesla, that's probably a good area to look at it. Okay, back into crypto now. So we've done everything for the stock market. Looking at crypto over here, things are starting to rebalance. Of course, in the very, very short term, I did update the whale room community over the course of the weekend, showcasing, my longer term overview for the market, but saying in the very, very short term, you probably will experience a little bit of a squeeze to the upside following a massive liquidation of all of the longs, right? So most of the longs over the last couple of days at least were squeezed out, right? You had just under about $1 billion worth of total liquidations, with about 600 million on the long side each of those days. So that often creates a major reset within the market. Now you do have a marginal, if I go on the monthly time frame, uptick over here on the daily exchange volume, combined with that almost $1 billion worth of liquidations, which often does create a healthy reset within the market. But there's a lot of work to be done here from the bulls. And if the bulls are going to take control, they have to step in immediately. And I'm going to show you why, right? They need to step in immediately, which means you're betting on, this whole war news blowing over and the market just melting towards the upside in the stock market and crypto following, because the only real bullish case that's going for crypto right now, or Bitcoin right now, is that you're currently caught in an Elliott wave, right? And I did drop a full analysis over the course of the weekend for the whale room members over there. And what I suggested is at least one of the things that we're looking at in terms of this analysis is the potential for an Elliott wave count, whereby we at this red arrow right now creating wave 2. So we want to complete the fourth from wave 4 to 5. So this is the fifth and final wave, which is your orange line. Your orange line would denote the end of the bull run, the fifth and final wave, all the way towards the upside, which means you absolutely 100% need this to be wave 2, right? Of that, because you have a substructure wave within the broader wave count. So you can see over here, wave 1, wave 2, wave 3, wave 4, and wave 5, which overall combined creates the wave 4 to 5 final count. So this is what you're looking at. But I'm going to show you when we look at things like total 2, 3, and others, they're kind of losing some of these levels and have already invalidated what should theoretically be that wave 2 substructure that leads into wave 3 of 5. What's important for you to understand is if Bitcoin can confirm this, or the total cryptocurrency market cap, which has the opportunity to still confirm this as a possibility, if you do, this wave to wave 3 is very, very violent and explosive, right? Wave 3 in the final wave 5 would be one of your strongest moves that you'd see within a bull run. So if bulls are still holding things up and this is still a bull run, you need to see some low time frame shifts towards the upside, and you need to see that moving very, very quickly. And I guess this is a little bit of hopium that is still possible, that we're seeing the very, very first shift in the daily exchange volume 7-day moving average over there. Now, I said I'll show you on total 2, 3, and others how this is not the case, right? Total 1 is still holding up, and it's purely because of Bitcoin, which holds such a massive market cap. And that's why we're seeing Bitcoin dominance reach new all-time highs once again. And it's this, right? We're looking at this. Last week, I told you that when this consolidation started to happen and the pullback started to happen, it was safer for most of you to not go bullish or long until such time as price could reclaim the 50% level, 3.3 trillion. And that was the same on total 2, total 3, and others. I said the best thing to do is wait for a sign of strength, which would be for bulls to basically get price from here. That was when we're consolidating around here. I said you want to see this and you want to see it hold this. Then if that did happen, then you can say with confidence that that's probably the wave 2 that's been complete, and we're now heading into wave 3, which completes the 5th and final wave, right? That's what we're looking at. But as you can see, you took another leg down. Of course, the good news is you haven't taken out this low. If you take out this low, you start to invalidate that thesis that you're putting in the wave 2 to 3, or you've completed the wave 2 bottom in that Elliott wave count, and you can now prepare for the wave 3 move towards the upside, right? If you take out that low, which as you can see you haven't, you're still holding above, which is at least one good sign. But that's only on the total cryptocurrency market cap, which shows the relative strength of Bitcoin, which is holding up. When you look at total 2, well, total 2's already taken out that level, which is not a good sign, right? Failure to reclaim the 50% level was your warning sign. What has it done over here? It's taken out that significant level. It's closed underneath that. That is not a good sign. Yes, you do have a trend line that's coming in over here, which has basically got this expanding megaphone pattern over here. You got the lows and the highs, and it's still respecting that potentially. But at the end of the day, in terms of the trend, well, you've lost that key level, which is not a good sign. So again, I would personally, before over allocating into altcoins or anything like that, you really need to see this reshift into a sign of strength, which it hasn't. Total 3 is marginally holding up. So total 2 has lost that key level. Total 3 is still marginally defending that low. If we look at others has lost it, right? Others has broken it down relative to total 2's supporting trend line coming underneath over here, which is at 724 billion. We have others, which is exactly on that trend line right now. So it's going to be a pretty important point. If it can't hold this trend line at 200 billion, it's probably going to drop all the way down to about 140-ish billion, which percentage-wise means for your average altcoin, another drop of about 30 to 35%, which would be pretty significant, right? 30 to 35% over there. So this is significant. It's an important area to look at. And there's your picture or your view of total 3 measured against Bitcoin. It's just bleeding all the way down towards this trend line. Others against Bitcoin, also, it's already broken the upsloping trend line, marked all the way through, and it's working its way down towards the bottom. We got another 26% loss still to take place against Bitcoin, which means, again, you don't need to rush into any altcoins at all. So we looked at this, we covered this extensively as the possibility that there is a Wyckoff distribution schematic at play for the daily time frame. In the very, very short term, I spoke about this all of last week. Watch for the sweep below $100,000. And then if you can reclaim that, there is a chance that there's bullish hopes that are still alive. And you've done that, right? You did sweep below. You've now reclaimed it. But I said in the Discord as well over the course of the weekend that to be realistic, the most likely outcome is that you're probably going to rally up over here and put in some sort of a lower high. And then you're probably going to just chop about and continue to move towards the downside. So in order to keep that wave 2 to 3 alive, you really want to defend this level on Bitcoin, which is going to be very, very, very important. That is $93,000. If you start to break below $93,000, I don't know, it kind of changes the picture, and we need to be really, really careful. And that's where we need to consider the real bearish warning signs on the high time frames that are there, which I'll cover in a minute, right? So again, as mentioned, the most likely outcome, I said, if you sweep $100,000 in reclaim, is that you're probably going to run up somewhere towards this region to set in a lower high. And if you look at that over here, this is going to be the cluster we spoke about last week. We said with that Bitcoin cluster over here, that's going to be when the 9 and 18 EMA cross below the 50 EMA. The previous times that we've done that, you did lead into much further downside, right? So the previous times, there you have it, 9 and 18 cross below. This is what I'm talking about. You put in a bit of a relief rally into that area, and then usually you drop back down towards about the 200 EMA and 200 MA on the daily time frame, which right now makes the most likely area of support between $93,000 and $95,000. That is the important zones to watch. You do also have liquidity building on Bitcoin towards the upside, but previously this was sitting around $111,000. Those orders have now been pulled down, right? So probably short traders who got in early on those shorts, they've now reduced their stop loss down to this region over here, which puts it at about 103,000, which lines up with this thesis. Sweep 100,000, reclaim, rally up to around that 104, 105, probably reject from that cluster of moving averages. And that is exactly where your short squeeze areas in the very short term. That's where your liquidity is. Now, this is probably the chart that has the most warning signs. We spoke about this. This is your bearish divergence taking place. Remember, we have the orange line, which is a bit more of an aggressive downtrend. We're not treating that as the primary divergence. So I'll actually make that a bit smaller over there on 2 points. The main one we're focusing on is the white one over here. And let's make that nice and big. There we go, 4 points over here. This is the main one that we're looking at. Now, if bulls do manage to break and reclaim into the party zone, this is why I believe Bitcoin could run out of steam very quickly around that $130,000 region, unless something changes. Like what? What could change? Well, the Fed could end quantitative tightening and move into full-blown quantitative easing and print money, right? That's a possibility. That could change this outlook. And the other thing that could change the outlook is, of course, if you are, in fact, about to complete wave 2 and you do move into wave 3, well, then probably you get some sort of a news-driven event that makes things giga bullish to push through those regions. But even so, I think that there's going to be a lot of trouble within this region. And I mean, don't take my word for it. You can literally just look at the chart, RSI coming down over there. The other thing that you want to have a look at is the MACD, right? If you have a look at the MACD is constantly putting in lower highs. It's really, really struggling over here on the weekly, which means you need newfound momentum. Where is that momentum going to come from? And we can actually compare this to the price cycle, which looked like this. When the price cycle topped, we can have a look at the MACD. There it is. And we can have a look at the RSI. It was very, very, very similar. Price put in a higher high, but look at the MACD. Lower highs, look at the RSI. Bearish divergence and lower highs, right? Started to trend towards the downside. So we have something very, very, very similar. It's not to say that it absolutely will play out like this. I think it's just, an indication that you need to be careful, which is why I specifically asked the questions that I did in the poll results. So let's go to the poll. There's the poll. What is your bull market exit strategy? 22% of you said you've exited the market already. 15% of you say you're going to exit next quarter, right? This is Q2. We're almost at the end of Q2. So the rest of you are planning in the next 3 months, you're going to exit, right? 42% of you are saying you're going to exit in the fourth quarter at the end of the year. Now, on the timing cycle thesis, theoretically, that is the most likely timing point for a cycle top, which would be September, October 2025. The other 21% of you think this is a super cycle and you're going to sell some point after 2026, in 2026 or later, right? Anyway, point is, just consider the warning signs. You need to be really, really, really careful in this environment. Base case would be that you probably chop about, maybe put in a bit of a deeper correction towards 95K, reaccumulate. And if you can reaccumulate, put in a macro high low, and then you can run it all the way up towards September, October. Maybe Bitcoin top somewhere around here, close to 140K. It depends on the timing. The timing is very, very important. But the problem is the momentum is weaning, right? There is no momentum. So we need something that will shift this. We need to see that daily exchange volume run towards the upside. So it has been a challenging market. I get it for a lot of you out there, especially if you've been like heavy in altcoins and stuff. You've probably really paid the price. And yeah, this has been the longest bear market for altcoins ever. Now, one thing that you can look at, this is what you should be praying for if you're hoping for higher prices in the crypto market, is that this still plays out. And this was a final shakeout on the USDT dominance. Right now, this is your SR flip region. I told you, you do not want to see this above 5%, and especially not holding above 5%. If you see USDT dominance gaining acceptance above this level, that means you should expect that these bearish divergences on the weekly are probably going to start to play out a little bit further down, and the Wyckoff distribution becomes validated. Remember, USDT holding above 5 and carrying on towards the upside adds immense pressure towards the rest of the market. So what your line in the sand is really this SR flip. Above it, you are bearish. And let's line that up with this chart. Let's put these next to each other. So above the pink box, bearish. Below the yellow horizontal line, bearish. If you can drop this pink box over here, it's as simple as that, and USDT dominance can break and hold back below that, then I would expect that Bitcoin can probably get above the yellow line. And if it can get above the yellow line, bullish, right? That's your line in the sand. I've said it for weeks. That is the line in the sand. Just watch that 106,145 zone. It's very important. So my outlook is that for the bulls right now, the best case scenario is to just consolidate for a little bit longer, maybe for another 2 or 3 weeks. If they can just hold this trading range for 2 to 3 weeks, meaning, you're chopping between about $95,000 and possibly even up to about 110, that's kind of the most bullish case scenario. That's your best case scenario. I think it's very unlikely that you'll V-shape out of here right now based on the momentum. I think consolidating a bit longer can reset things slightly. Maybe new volumes come into the market and you start to see an uptick, and then we can very quickly reposition on the long side. So right now, cautious as long as the USDT is above 5%. If it breaks below, and especially if it starts to lose this trend. If it loses this trend, you'll start to get an aggressive move towards the downside, and then you're probably ready to confirm this, right? Wave 2 into wave 3, which completes the orange part, the final wave 5 count over there. Okay, so a lot of moving parts. Those of you who have been around the block and been here for a while, you probably understand exactly what I'm saying. Another thing that's coming to a major inflection point is the BTC dominance. There it is, BTC dominance. It's just got a little bit more to go to get to 66.39%, which is the pink box, which is your 0.786 fib retracement level. 66.27% is the Bitcoin dominance target. And that also lines up with this parallel channel that's just been riding up for years now, right? You'll be hitting the top of that, at least trend line over there, which is going to provide some resistance for the market. So we'll keep an eye out on that. ETH, right? ETH BTC. This put in the 𝗏𝗏𝗡𝗏 that I spoke about. I said, be careful, guys. This is a real possibility. Remember, you may put in the 𝗏𝗏𝗡𝗏. I told you, remember, we'll put the sad face over there because most of you don't want it. Now, most of you look like this. Wide open mouths. Can you believe it? Can you believe it happened? It happened, guys. It happened. The ETH BTC has dropped back down, but this is theoretically a major demand, right? This is a major demand area. If you can drop any further into there, you came very close to wicking it. That is going to be your big fair value gap on the daily time frame. I'll show you on the USD pair as well. It came into that fair value gap, and there is a little bit of a reaction over there. So here's your fair value gap on the daily time frame. Pretty much tagged it. There we go. Into the fair value gap, tagged it. If it can hold this, we'll see. We'll reevaluate. This has broken structure though, right? It hasn't broken. Look, it hasn't broken structure in the sense of taking out these lows. But at the end of the day, this higher low structure that was forming over here, it broke that, right? So invalidating the ascending triangle and doing exactly the same thing, 𝗏𝗏𝗡𝗏 pattern, just like against the BTC pair. And there it is, right? 𝗏𝗏𝗡𝗏𝗡 pattern. Okay. For those of you wondering what is the 𝗏𝗏𝗡𝗏𝗡 pattern, just Google 𝗏𝗏𝗡𝗏𝗡's image of his head. It basically runs all the way up, big strong move, consolidates, and then distributes back down. All right, so we can have a look at some of the altcoins. Now, this is the only thing. This is the major area. If you want that trend continuation and you want this Elliott wave to play out, you really don't want to take out some of these lows, which a lot of the coins already have. So ETH is one of the few that look relatively strong. I'm going to just circle the area. The order block that led to the move up. You don't really want to take out those moves. Now, Ether's holding up relatively, even though it's come down, whereas a lot of the other coins have taken those levels out. Let's quickly go to Solana, right? Here is Solana's zone. There's that order block that led to the big move up. Wiped. It's taken out. 𝗬𝗎. 𝗬𝗎 is still holding up. So 𝗬𝗎 has that relative strength. There's the circled area. You don't want to take out that circled area. That is if you want to confirm this. Wave 2 to wave 3, that becomes a very, very, very significant area of interest. In terms of a fair value gap, it has also theoretically tagged and filled that. Look at that, perfectly into the fair value gap. It is holding it. So we need to see, you need to see momentum start to shift. Watch those momentum oscillators. Look for the turnover there. Okay, all the way back down, Sonic against USDT trading range. We spoke about this. We're looking for the manipulation phase, which this could be. So again, just trail that trend line. Wait for that trend line to break. If you're looking for the low time frame shift, wait for that break of structure, higher high, higher low on the low time frames, and then that becomes your signal. I'm still scaling in on this. I think most of the orders are probably filled with the bots over there on Sonic, because I think I laid them down to, I may have gone a little bit lower to, I think I went to the bottom of this box, like somewhere around 22, 23. So most of my orders there should be filled on that. So I'm still holding on to that. 𝗏𝗃, let's quickly view 𝗏𝗃. Okay. 𝗏𝗃 also taking out some key levels, breaking below this. We spoke about the most likely outcome for 𝗏𝗃 was a move back down into the pink box, which was over here at about 0.05. That was the best case scenario. You broke below this. We spoke about that. That grinding effect was likely to do that. Hype, okay, despite its relative strength, we said also probably going to throw back into the SR flip region at about 31 cents. It has done that. Now what you need to be careful of is that it doesn't print some sort of a head and shoulders pattern over here, right? Left shoulder, head, meaning if it puts in a lower high over there, and that's going to be your right shoulder, that would break it down all the way to about 18. Okay, so that's for hype. So best case scenario is similar to Bitcoin. For hype, you basically just want to see a trading range form over here. That's it. You just want a range on hype. That's your best case scenario. It's unlikely to expect that it's going to do that. Okay. What else? What else? Let's see. Any other major coins? Tron somehow still holding up. Unbelievable. Your Excellency Justin Sun did it again. Still maintaining a little bit of a high-low structure over there. Let's see. Ondo. Okay, broke that trend all the way back into the horizontals. Very key level. Watch 54 cents is a major area of interest. Tau. Okay, losing the 50% level, most likely to revert all the way back down to about $200. Percentage-wise, that means Tau could come down another about 35% over there still. Render. Okay, big SR flip region. Huge, huge, huge SR flip region. You can see over here how price previously resisted there, rejected, found support, rallied towards the upside, support. Question is this support again? So for render, very, very, very important zone over there. This needs to flip into support, and you need to see some sort of a reversal. Okay, grass all the way back down to range lows. So you probably want to see that bounce over there. Most likely to come back down on FET all the way to about 47. Let's see Pepe giving up massive gains over there. You don't want to take out this low. There it is. If you take out that low, it probably comes all the way down to 573 range lows. All right, let's see SPX. We're looking for maybe a right shoulder. It will take time. Cup and handle, excuse me, not right shoulder. For the handle, it will take time. So this needs to SR flip this region. 90 cents. You can't go under 90 cents. Just give it a bit of time. It will probably chop about, but you're looking for something like that on SPX. And then if it can start to reaccumulate, then maybe it has a chance. That's one of the strongest memes in the space. All right, we covered Solana. We covered it, guys. We covered Ethereum. We did that already. Like low time frames, expect that there could easily be mean reversions, especially if the tensions diminish. Don't be surprised if this rallies all the way back up to 2,383. But that's going to be the level to reclaim. Wherever the breakdown levels are, or the breakout levels. So here's your breakout level in Solana. There you go, rallies towards the upside. Those become significant turning points. So this becomes a major support in the future. You don't want to lose that. The breakdown levels, that becomes a significant area, which means if price rallies all the way to the breakdown level, but it can't get above, that's your most likely place to set in the next lower high. I'm on the 4-hour time frame here, right? And then you could obviously move all the way back down into about just under 2,000. All right, Fartcoin. Sure, we can have a look at Fartcoin. Let's just move this up. We'll have a look on the daily time frame. There it is. Okay, also a big level, big level. It's trying to hold this. It broke multiple candles below already. Your strongest main support is coming in at 73. So I gave that as a major support area. You can see, I mean, it came within spitting distance, guys. That's like 3% away for a coin with this volatility. Good that it's holding above over here. But in terms of trend, you know, it's been putting in lower lows and lower highs. Like on a daily time frame, you can't deny it. You had here high, low, higher high. What did it do? It broke down. Lower low, lower high, lower low. So yes, it can rally over here. But if it puts in a lower high, be very, very, very careful. It could still move all the way back in like this. But this is generally speaking your bounce area for Fartcoin, generally speaking. All right, remember guys, if you do want to trade these things, probably one of the best places to do that is going to be Bybit. That's for Fartcoin, for pretty much everything. They're bringing commodities, Forex, everything over there. The link is below. If you use that particular link, you will get up to a $30,000 sign-up bonus, right? That is for the crypto banter community. And then for the rest of you, if you want to join into Whale Room and you want to get all this additional info and alpha with all of the trades and everything that we're looking at, of course, that is in here. Where's our little Bart Simpson? I should look for that one over here to highlight for you guys previously how we said that was a possibility for ETH. All right. Cool, guys. Other than that, I think let's see how the markets unfold for the US. That's it from me. I'll see all of you on the next one. Have a great day, everyone, and cheers for now.